Hello, everyone. Thank you so much for joining me today. I'm so excited to spend this next 30 minutes or so with you going over all the details about understanding your VA home loan benefit. My name is Sabrina Barella. I am a mortgage loan officer with a military HomeSpot lending, which is under the parent company of MortgageOne. We are based here in Southern California, San Diego to be exact. And I have been in lending. I've been with Military HomeSpot lending since 2021. To date, I've done between 75 and 80 VA loans, I believe. And this is just absolutely one of my favorite loans to do. I was a military spouse in my 20s, and after getting divorced, I did continue to work with the military in various capacities, both with Marine Corps, Navy, and then also a number of nonprofit organizations that work with active duty and combat veterans. And so really been my family and just my community for the last few decades. And I also do have military in my family. I have a grandfather who served in the Navy in Korea. I have a cousin who is currently in the Army, and again, military Marine Corps spouse in the past. And so it's just this community is just one of my it's very special and dear to my heart. So let's dive in. I do have to start with legal disclaimers as required by law. So I'm just going to read through these to start. This event is not sponsored by or affiliated with the United States Department of Veterans Affairs, the California Department of Veterans Affairs, or any other congressionally chartered or recognized organization of honorably discharged members of the Armed Forces of the United States or any of their auxiliaries. All of those do offer free advice to veterans about how to qualify and apply for Veterans Affairs specific benefits. I personally am not authorized to file an initial application for Veterans Aid and Attendance benefits on your behalf, or to represent you before the Board of Veterans Appeals within the United States Department of Veterans Affairs in any proceeding on any matter, including an application for those benefits. It would be illegal for me to accept a fee for preparing that application on your behalf. We're not going to be talking about aid and attendance benefits today anyhow, but I do have to include that in there. And then finally, the seminar is for educational purposes, and loan qualification, should you apply with us, is not guaranteed. Loans are subject to borrower qualifications, and not all applicants will qualify. Okay, we got that out of the way. Let's jump in. So let's look into the who, what, where, when, why, all about your VA home loan benefit. My goal in the next 30 minutes really is just to equip you to go out, plan your next steps, plan your battle plan in order to achieve your goals and your dreams of buying a home. So I want to start with just going into a little bit about the history of the VA home loan guarantee and the program. It's evolved quite a lot over the decades, and so I thought it would just be fun just to give you an idea. This is something that I actually did not know about until I came into lending. So historically, the benefit, what has evolved today to be the VA home loan benefit, it actually started during World War II timeframes in 1944 to 1945 with the Servicemen's Readjustment Act. And at the outset, so initially when it was starting, veterans could apply anytime within 2 years of separation from the military or within 2 years of after the war ended. And so at the time, applications after September 16th, 1950 were not accepted, and that was cut off. And also at the time, just a fun fact, that the VA guarantee back then was 50% of the loan, but it could not exceed $2,000, meaning that $4,000 was the max of the loan, and the average home price at the time was around $8,600. So depending on where you lived in the country, I'm like, didn't necessarily kind of limited options. Now, we expanded it going into, we expanded it, the Veterans Affairs, the government expanded it going into 1966. They had the Cold War GI Bill, extended benefits to Korean War veterans, but it still had very strict expiration dates after applying. And then we jump into the 70s. So 1977 and 1970 and then 1974, they had the Veterans Housing Act each of those years. In 1970, President Nixon signed into law the Act of 1970, which eliminated the expiration date, which is awesome. That opened up the loan program to about 9 million World War II and Korean War veterans who regained access now, who didn't get to use it prior. And then in 1974, the act of that year allowed veterans to restore their entitlement after selling a home or paying off the loan. So that again opened it up to about another 4 million veterans to the ability to obtain a new loan or to be able to use it multiple times now. Fast forward into the 80s, active duty requirements were updated, and so now it was opened up to active duty members as long as they had, or once they hit the 24-month mark of continuous active service. And in 1987, the guarantee was raised to $36,000, which don't worry about those numbers. They're not going to apply as much today, but this is just historical. So again, 1992, moving into the 90s, the Veterans Home Loan Program Amendment. So big changes in the 90s. It did extend benefits to Gulf War veterans, and then they set this August 2nd, 1990 as the beginning date for accruing wartime benefits. Eligibility was extended to reservists and National Guardsmen at that point. So even if you were only in the reserves or only in the National Guard, once you hit the 6 years of service there with an active unit, with either reservists or guardmen, then you would also be eligible. And then they also they extended for loans. Again, don't worry about these numbers or how they apply. We'll talk about that later in current time. But above $144,000, they would guarantee 25% of the conforming loan limit. In 2004, stepping into our current century, so they increased the maximum guarantee amounts, which would open up just the ability for more people to buy. And so even just to give you an idea, this 2007, so even if you remember 2008 was like the big housing crash and all that, but prior to that, even in 2007, only 133,000 loans were guaranteed versus we jumped 6 years later in 2013 and over 4 times or almost 4 times that, 630,000 loans were guaranteed in that year. And then in 2013, that marked the 20 millionth loan guarantee, which went to a surviving spouse, Miss Beth Carpenter, who was the surviving spouse of Army Captain Matt Carpenter. So let's jump into eligibility and who is eligible for a VA loan. I apologize. I do feel like I'm going a little quick, but I want to make sure that we pack everything into still keeping this roughly around 30 minutes so that we can get you back to your day or your night. Depending on where you are. So let's talk about eligibility. So for our main branches, Army, Navy, Air Force, Marine Corps, and Coast Guard, I'll let you look depending on where your service time falls within, whether it was wartime or peacetime. There's 90 days active duty during wartime or 181 days during peacetime. Now, if a veteran, if you were discharged prior to serving 24 months, you could possibly lose your eligibility depending on the type of discharge, and I will go over those a little more in a minute. And then again, like we said, when it was open up to selected reserves and National Guardsmen, once you've hit 6 years as a member of an active unit, and either if you're still continuing on, that's fine, or if you had 6 years with an honorable discharge, placed on the retirement list, you can also qualify for that. And then other categories that would also fall into, so again, if you maybe you didn't hit the full commitment, but if you were discharged for a service-connected disability, so if you were wounded in action, for instance, or some other sort of anything that would fall under service-connected disability, then you would qualify. If you are a surviving spouse of a veteran who died either in service, so KIA, or from as a result of a service-connected disability, and so if you're getting It's not all surviving spouses, so there are different categories, but typically the surviving spouse annuity payments that surviving spouses will get, if you're falling into that category where you're receiving those payments, oftentimes that will partner with being able to do a VA loan on your own, but we can definitely check into that with you if you have a question on that. And the other caveat too is that you can't be remarried. So if you are a surviving spouse, you're receiving those annuity payments, etc. If you get remarried to a new person, then that would you would no longer qualify. So you would have to be unremarried at the time. And then also, if you are a spouse of someone who's classified as a POW or MIA, then that would also apply to you to qualify. I think I'm going to skip over this, requesting your certificate of eligibility. You can do it online through the VA portal. However, if you're applying for a VA loan, then your loan officer, myself, I do have access to the VA portal, and I can pull that up. We do that standardly as part of the application process, so I can do that for you. If you want a copy of it, I can send it to you as well. If you're applying. And so, okay, let's jump into the next section. So who can finance? Who can apply for a VA loan? And so veteran or active duty service member, you can apply on your own. If you are legally married, then your spouse, regardless of if they qualify on their own or not, they can qualify with you. It'll go under your entitlement. That's fine. You'll still get all the benefits that we'll go over in a minute. Or if you have two unmarried individuals that both qualify individually, you can co-borrow on one loan, and then that would work as well. Now, it is technically possible that you can apply with somebody who is not your spouse and who is not a veteran who wouldn't qualify. However, then you get into the territory where the VA is actually, because they guarantee 25% of the loan, they're only going to guarantee half of that, or the portion, based on you who qualifies. And they would actually require a 12.5% down payment. If I'm being honest, I don't think it's really worth it at that point. We just switch you to FHA and you do 3.5% down. But again, technically it's doable with the VA loan. Other big things is that it must be your primary residence. It must be owner occupied. You cannot buy investment properties with a VA loan. And in terms of the property, so what we're looking at is it must be in good condition. So a big thing is, I always use the term like move-in ready. It also, you could say, it has to meet the 3 S's. So the safe, the sound, the sanitary, can't have open construction. The big things they're going to look at is what are the state of the roof, the HVAC, the electrical system. You can't have any open construction, so no open walls or open floors. It literally just has to be move-in ready. It has to have like the major appliances like a stove, things like that would be, connected into gas lines like that. They have to be there and present. And if there are any additions that were added after the original building, then they must be done or completed in a workman-like manner. And again, they have to be completed. They can't be open construction. You can also buy a condo or a CPR. I actually had to look up what a CPR is. Apparently, currently, these are really only in Hawaii, which would explain why I personally did not know about them. But you can, if you're in Hawaii and you're looking to use a VA loan, you can buy a CPR. Or for those of us in the United States or in the rest of the United States, the continental US condos can be used. The big thing with condos is you do need to check that the association of the condominium has been approved or can be approved with the VA. There are certain stipulations which we can look over that. Sometimes older condominiums will not be qualified. So that is definitely something that between your lender, like myself, or especially your realtor, can look up when you're looking at condos, just to make sure that they would fit in with a VA loan product. Same would go if you were doing an FHA loan. They'd have to be qualified or approved by either the VA or by HUD if it's FHA. So I just love this picture. But why use the VA loan? Any benefits? Yes, of course there's benefits. There's so many benefits to this loan. Hands down, my favorite loan to do. And so I think the biggest thing that it's known for benefit-wise is no down payment. And so When you're buying a home, standard mortgages, so outside of the VA loan, there's actually only one other mortgage loan product that does allow for 100% financing or down payment. That's a USDA loan, which is even more restrictive, a lot more restrictive. But you're normally going to have two sets of payments with most mortgage loans when you're buying a home. So you've got your down payment, you've got your closing costs, which we'll go over in a minute. But the down payment portion, the VA actually eliminates one of those two, which is the down payment. And so they will do 100% financing on the loan or for the loan, as long as the home appraises for that amount or higher. And so as long as the home, if your contract price is $400,000 and the home appraises for $400,000 or higher, then you can finance that full amount. Another benefit is there's no mortgage insurance. So if you get a FHA loan or a conventional loan and you don't put 20% down or more, then you're going to have a mortgage insurance requirement, whereas VA does not. So because of that guarantee that we talked about, that they guarantee a portion of the loan, that actually eliminates the need for mortgage insurance, which is going to equal more buying power. So then the second part, let's talk about is closing costs. So this is the one cost that's associated with a VA loan that you as the buyer are going to be responsible for having a plan to cover. And we are going to need to know what this plan is before your realtor can write up offers on a home. So three main ways that closing costs can be paid. So first, paid out of your personal funds. So anything that you have saved, you've set aside in a savings account, in your checking account, or even if you have a retirement account like a 401k, a TSP, you can do early withdrawals if it's for the purpose of buying a home. That does fall under one of the categories for a hardship withdrawal, where you can actually withdraw the funds early without getting penalized for early penalty fees. Or you can also do a loan from your TSP or your 401k, which is where they actually will pull it out, pull payments out from your paychecks going forward for a certain set period of time. So that you can do either of those things. Paid by the seller. Now, this is something that does specifically have to be asked for with each offer. And then also you would have to, or the seller would have to agree to it. So that can be, your realtor can ask for a percentage or a dollar amount to help cover or bridge a gap in closing costs. And then the other thing is through lender credit. So say we maybe we have some seller credit, maybe you're bringing in some, and maybe we just have a small gap that we need to fill in. We can always look in that. We obviously can't cover all your closing costs with lender credit, or we would be paying you to do the loan, because the overhead for on the lender side honestly is very is small compared to everything else. But just so you can understand like what makes up the closing costs, which I would say the average, if your credit is over 620, 640 or higher, you're generally going to be roughly around 3%. If you have a loan amount that's under like 300,000, the percentage might be higher because of set rate fees, versus say if it's over 500,000 or higher amounts, then that percentage is going to be lower compared to the sales price. But just rough average, I would say 3% is usually what I tell people to plan for. And there are all these third-party costs that just can't be wrapped into the loan. And so you've got the appraisers, so you're paying the VA to send out one of their special VA appraisers. You've got underwriting and processing, which is on the lender side. You've got the credit report, and then title and escrow fees. That usually is going to make up the bulk of the closing costs, which is all going to go to the title and escrow. All the filing fees, the transfer taxes, all that stuff that has to, the county requires to transfer the title from the seller to you. And then you're also going to have escrowed amounts, so a couple months of escrows for your homeowner's insurance, your property taxes, and then depending on where the housing market is, sometimes interest rates will come with either a cost or a credit. So if there's a cost, that would apply too. If there's a credit, that would just come, would apply towards your closing costs and reduce them. So lots of details, but that in a nutshell is what your closing costs are. We would need to know, again, we need to have a plan to cover them before we actually start putting in offers, so that your realtor and I can connect and we can just have our plan for how we're going to cover that when you get your offer accepted. Other things to know, I'm going to start with the bottom one. So there's no prepayment fees or penalties on a VA loan, which means that you can pay it off sooner than the term. You could pay it off quickly if you wanted to, and there's not going to be any penalties for paying off early. And then the funding fee is the one thing to know about in terms of fees from the VA. This is the only fee, if applicable to you, and we'll go over who would get a funding fee versus who would be exempt in a minute. But it's just a one-time fee. It gets financed into the loan if that does apply to you. Other options with a VA loan, you've got a streamline refinance. So for those of you that still love your acronyms, we've got the IRRL, the IRRRL. That stands for Interest Rate Reduction Refinance Loan. That's a quick and easy way to, it is strictly to reduce the rate and reduce the cost or reduce the monthly payment. Those can be done in anywhere from 2 to 4 weeks typically. And then you've got your more traditional cash out refinance, which would be if you're wanting to, pay off bills, like do debt consolidation or pull cash out from your equity for projects or fill in the blank. You can do that. A traditional refinance is probably going to take closer to like a 45-day process. And then you can get jumbo loans with the VA as well. This is a really awesome. I've done this several times. I've seen loan amounts go as high as like $4 or $5 million VA loans, as long as you have an open entitlement, meaning you don't have any other VA loans. You can still do 100% financing with multi-million-dollar loans and a VA loan. Which is pretty awesome. And so anything jumbo loan territory, what that means, jumbo is just that it goes over the county's conforming loan limit of that, that time in that county. So just to give you an idea, the current year, 2026, the conforming loan limit is $832,750 across the U.S. Or if you're in a high living area, a high cost living area like myself in Southern California, in San Diego County, it's 1.1 million and change. And so that is something, again, is just a perk. Obviously you do need to qualify with credit and income, but yeah, you can definitely do VA jumbo loans. Rates are still pretty much the same. There might be a slight rate cost that goes involved, but overall, I mean, it's not too much different from a conforming loan. And the only thing to know I would add for a jumbo loan, if you are going over the county loan limit, sometimes this is an underwriter discretion, but they often will add a condition like wanting maybe a couple months of reserve, say 2 to 3 months reserve, something like that, basically showing like the amount of the monthly payment that's going to be that you would have in savings or in a retirement account or just some sort of assets to fall back on. For jumbo loans, they often will want just at least a couple few months reserves, and I think everything else is pretty much the same. So just to give you an idea of the funding fees, just note the funding fee, it's the same for all eligible service members and veterans. There's no difference in your service status. But just to give you an idea, so if we're doing 100% financing, no down payment, your first time doing the VA loan, it would be a 2.3% of the loan, or if it's a subsequent loan, then 3.6%. And if you do end up bringing money in, which I really only see this with VA loans, like say if it's your second home or subsequent home, you got a good chunk of profit from the first one, and you just want to lower, lower the monthly payment in the loan that you're actually taking out. So you're bringing in some money, depending on where that percentage falls in for what you're bringing in, then that will reduce the one-time funding fee accordingly. I wanted to take just a minute to go over some myths, common misperceptions that I've heard or I've seen online, things that people ask about, just so we can cover those real quick. So number one, I can only use my VA benefit for my first home. This was true in 1945, you guys. It's not true now. So thankfully, as things have grown and evolved, you can use your benefit multiple times. The second one, I'm not honestly sure where this one came from, but there is a misconception that sellers don't like VA loans. Some of them may not. I think it's really just comes down to they don't understand them, but that a seller won't accept your offer because they have to pay points or they have to pay certain fees. While a seller can contribute seller credit, if we're asking for it and they agree to it, it's not a requirement for them to pay. So they're only going to pay the standard closing costs, like the owner's title, for instance, in most states, according to what they would pay for any loan or any contract. Myth number 3, my spouse's income can't be used to help qualify for the home we want. False. As long as you're legally married, or again, I think I mentioned this earlier, but if you're in a state that recognizes common law marriage and you're in that type of arrangement, that would qualify too. But no, your spouse, as long as you're legally married or in that kind of state recognized relationship, that you would, you can still do 100% financing. You still get all the same benefits, and you can use both your income. The only thing is that you both credit qualify as well. So how that would work with credit is the qualifying credit score used would be the lower of the 2 middle scores. But as long as both of you are good with credit in your credit, then yeah, income can be used too. And then the last one is just around the funding fee. There just seemed to be a lot of confusion around the funding fee, but the only time you're going to have a funding fee is if you are, active duty or if you do not have a disability rating. So veterans with a 10% or greater disability rating are going to be exempt from the funding fee, meaning that literally your loan is going to just be whatever the amount is of the contract if you're doing 100% financing. And I did hear something recently, I think it actually even went down to 0%. Like now you can actually be like qualified for certain benefits if you have 0%. And so that we can check where that applies to. But yeah, then you'd be exempt. So I also wanted to talk just a little bit about non-taxable income, because that is a really cool benefit too that the VA will allow you to gross up. If you're active duty, your BAH, your BAS, or even with VA disability, since it's non-taxable, we get to gross those up 25%, which gives you more buying power. So especially for those of you who are active duty, I just wanted to give you an idea of what that can mean for your buying power. So these are based on 2025 BAH numbers with dependents. So you're going to see, based on rank up here, and then I just gave kind of a selection of cities around. You can see, so San Diego, where I'm at, even an E1 is going to get 3,663 versus Camp Lejeune 1,554. So, and then that just the amount goes up per rank and per your service time. But each of these amounts, no matter where you're at, are going to get grossed up to give you more buying power. And so just an example of that would be, so again, this is based on 2025 numbers, but so if you're an E5 basic Camp Pendleton, which is about 3 miles from where I live, in Oceanside, California, with dependents, you're going to get $39.21 in BAH monthly. That grossed up by 25% is equivalent to $49.0125 in qualifying income. So that's an extra $1,000 that gives you in qualifying income, which $1,000, I would say that's probably a good, 125,000, maybe even more, worth of buying power that you get just with that non-taxable income. And again, the same applies if you have VA disability. So VA disability, that, that 3,900, that's equivalent to about like 100% disability rating currently, roughly. And so again, if that's what you're making in disability, then that 4,900 is what you're going to get in qualified income. So pretty cool. Okay, we are coming up on the 30 minutes, and I want to honor your time. Just thank you again for being here, but I want to talk just briefly. Okay, so what's next steps? You're ready. I've just jam-packed your brain with a ton of information, but where do we go from here? And so how do we get started? I want to talk about real quick. So first step is always going to be to have you fill out an application. So depending on where you're viewing this, there should be some sort of comments or notes that should have a link for applying online. You can get started by filling out an application online, or the next slide I will give you will have my email, my phone number. You can always reach out to me if you prefer to do it over the phone, or if you have some questions that you want to get answered first, let's connect, let's get those answered. But just so you know, like once you're filling out the application, whether we do it on the phone or online, then you're going to be asked for documents, which are going to be documents that verify all the information on the application. And so your DD-214, if that applies, or a point statement, a statement of service. If you have a full-time W-2 job or your active duty, it's going to be the last 2 years worth of W-2s, so any W-2s in that time, and then also pay stubs or LES to cover the most recent 1 month period. Don't worry about the certificate of eligibility. I will actually pull that for you on my own. Bank statements, it's going to be 1 to 2 months. Tax returns, those are only going to be needed actually if you either have rental properties that you're reporting rent for, or if you're self-employed or get 1099 income, then we will need tax returns. If not, don't even bother. We won't need them. If you filed for bankruptcy within the last 7 years, so where it's showing on your credit report, they will ask, underwriter will ask for that, especially if you're in like a Chapter 13 where you're making payments, that kind of thing. They'll want all that paperwork. And if you've been divorced in the last like 10 years roughly, especially if you're paying child support, then they'll want the divorce decree too, just to confirm like both child support or if there's alimony being paid, that kind of thing, just to make sure that we are accounting for all debts and liabilities, that we get an accurate qualification amount. So I'm going to end on this slide. This is all my information. This number here, 619-790-5855. That does come to my cell phone, so you can call or text me at that number. The email, the Go MortgageOne, again, that's our parent company. Military HomeSpot is under MortgageOne, so you can reach out to me that way. Or you can DM me if you're getting like Facebook or Instagram, especially. I'll get DMs pretty quickly. But yeah, just reach out to me. I'm happy to answer any specific questions, scenarios, income, credit, etc. We will always start with a soft pull of your credit when we're doing an application. So what a soft pull means is it allows me to view 2 of the 3 bureaus. It does not allow me to do it does not allow me to issue credit with a soft pull, but it won't count as a hard inquiry. It won't ding your credit. And so it allows us to view, we can pull it in, we can tell you, okay, this is how much you qualify for, as well as if there is anything on credit that could potentially delay or postpone a qualification, we can also look at that. If the amount, for instance, doesn't maybe give you enough for the kind of house that you're really hoping to buy, we could also look, I can suggest, I'm not an attorney or a tax preparer, but I can definitely just suggest based on experience, what are things, cards you could pay down, things that we could do. We could run credit simulators online for you just to see, what would we need to do maybe to even get you in a better position for ultimate qualification and to meet your goals. So yeah. But yeah, reach out to me. Let me know. Let me know if you want to schedule an appointment, or you can just go straight to the link, fill out an application online, and I'll follow up with you afterwards. But thank you again. Just thank you so much for your time today. Thank you for everything you had to do to be here, and just thank you for your service, whether you're in currently or whether you served in the past, regardless of when it was. I just thank you for your service and your sacrifices to our country, and it would mean the world to me to be able to jump on your team, to have your back in this next home purchase. So have a wonderful rest of your day. Again, this is Sabrina Barella, and I look forward to speaking with you soon. Take care.